I'm Dennis Williams, the creator of CashMap, and thanks for joining me while we talk about how the banks don't share with us the whole picture and how it's costing us big time. When I've shared this information, I get any of the following reactions. People try to reconcile what we're going to talk about with what they've always heard. That won't work. They question the reliability of the information. Many quickly assume it's a scam, or the information we're going to share is just dismissed outright because we're sure that we're right. Financial institutions, all too often, they're way too short-sighted. They don't provide us with complete information. Their primary focus is on boosting their short-term profits. They don't advise us how to prevent missteps, and too often they're forced by the government to do the right thing. And lastly, if something does happen, even if it's not our fault, they're quick to take corrective action. But imagine a financial institution that act with a holistic view, that they provide us complete and timely information, enabling us to make the right decisions. They proactively provide us debt reduction strategies, and that they, in turn, are committed to growing profits by growing their customers' growth and their financial wealth. And they create flexible products to meet customer needs and ensure that we know how to best use them. And they reward customers that are disciplined. We're not advised about the difference between good and bad debt, or what's an average daily balance or a daily interest charge and how to manage it to our benefit. We're not advised about a full range of products and simple ways that we can use these products to enable us to pay less interest. Why we should never be only making minimum payments, and making seemingly small additional payment amounts can make a big difference both on the interest we pay and the time it takes to pay off a loan. So for an example, typical North American has $6,800 in credit card debt at 24%. If their budget is tight, they're going to focus on just paying the minimum, $136.98, and they're going to pay $67,000 in interest, and it'll take them 45 years to pay it off. But do they advise us with just small additional amounts, just how much it'll have on lowering the time it takes to pay off this credit card, or the savings we'll get in interest? Absolutely not. So in the example that I used, which is in another video that I created on paying off a $6,800 line of a credit card at 24%, we use the following assumptions: that every 2 weeks or twice a month, their income deposited is $1,976. Their expenses for the month are $3,600. They're putting aside $60 for savings. They're making a minimum credit card payment of $136.98, and they only have $200 left after they pay their bills. We're not advised using a line of credit that, besides it being a great cash source, what the poor uses for a line of credit are. That is a great vehicle to quickly reduce debt. We never hear that. The simple steps that we can use using a line of credit to dramatically lower the interest that we pay. That the timing or the billing cycle that we use is absolutely important. And similarly, the date we pay our bills is extremely important. So to pay dramatically less interest, we just need to follow 2 simple steps. Schedule paying all your bills on the last day of your line of credit's billing period. And second, as soon as you get paid, move all your income to your line of credit until you need that money to pay your living expenses at the end of the month. And by just doing those 2 things, you'll be keeping your money working for you 24/7. Let's look at a quick example. At the very beginning, we took $6,849 and paid off the credit card. We then got paid, and it lowered the balance on the line of credit to $4,800. We got paid again on the 15th. It lowers the balance to $2,895. And then on the 30th, we paid our living expenses of $3,600, increasing the line of credit back to $6,500. But the average daily balance is only $39.40. And based on that, the average daily balance is $32.84. Now, if we move it from the 30th to the 2nd, when we make that payment for our living expenses, it increases the balance to $8,500. It stays that way until we make that additional payment when we get paid on the 15th. But now the average daily balance is now $7,000. And the impact is, based on the daily interest charge, is $60.59 or $61.43 if it's being calculated using the average daily balance. So we're paying $28 more in interest, and that's going to accumulate to $503 more in total interest in the time it takes to pay this credit card off over 2 years. So the impact of just these two little steps on the average daily balance is that by moving our income into the line of credit as a payment, we're dramatically lowering the average daily balance. By paying the bills on the last day of the line of credit, keeps the balance low for that one day before our income comes again and knocks it further down. Paying less interest allows money to go to principal, and this loan is paid off in 2 years. The total interest at 10% is just $251 and only $551 at 24%. So if we were to look at the average daily balance versus the ending balance on the line of credit, there's the blue line showing the ending balance. If we pay it on the 2nd, it actually increases it above what the actual amount owed on the line of credit is at the end of the month. But if we pay it on the 30th and we see that the average daily balance is lowered dramatically, and in turn, here are interest payments, here's the line of credit, and here are the interest payments if we end up paying on the 2nd. So to summarize it, just look at the difference here. At 10%, if we pay on the 30th, we'll only pay $251, but if we pay on the 1st, it'll be $802. You see the similar difference at 15% and at 24%. Just by paying our bills on the 30th instead of on the 1st of the month. So, do we really want to make an extra donation to your financial institution? And wouldn't it be great if your bank was sharing this kind of information with you so that you could be making these kinds of decisions that would save you thousands of dollars? So to prepare yourself, you need to know that employees have not been trained. So you need to ask them about how they set up their billing cycle and be prepared that they're going to have to ask for help from their supervisor. Let them know the cycle date that you prefer. You may have to submit your application and it may be tied to the time frame that you want for the cycle. Calling to reschedule payment dates is really easy and it's fast. Other options to consider is if you're unable to get a line of credit large enough to cover, then check and see if you can get a card at a lower rate and see if there's a lower introductory rate. Get a smaller line of credit and then use the line of credit to pay off the other debt in small amounts, and CashMap will give you the guidance for that. Shopping around can also make a big difference. And with the CashMap Pro, it tells you how much to withdraw to start and when to take an additional withdrawal from your line of credit. CashMap Pro is an innovative wealth building tool that allows you to create personalized solutions for your particular situation to keep your income working for you by creating a low interest loan. See the date your loan's going to be paid off, see how much interest you'll save, you choose your savings assumptions and see it grow, and see what the effect is of the assumptions that you make over the next 5, 10, 15, 20 years. So, to help you get started, we've created a series of webinars. Create your own low interest loan, another one called Save Time Paying Your Bills that'll help you save thousands, and discover how much you're donating to your bank. And that's a demonstration of the CashMap Pro software. Visit our updated website at www.cashmapapp.com, over 90 articles, ebooks, interactive resources, a variety of consulting options, and webinars. Thanks for joining me.